Grayson. I want to talk about what we did last week with our Prudential Jennison Natural Resources Fund. And what we did last week was we sold out of it. I wanted to explain why. To really understand what happened with our holding of this fund, you have to go back to when we got in, which was during the great financial panic of 2008. During that time, the mutual fund fell about 53%, which is a little bit more than the stock market, but pretty catastrophic. Everything was horrible. And I looked at this fund and I could see that we had PEs in there of something like 3 on the major oil and metals companies. A PE of 3. I mean, this is historic, once-in-a-lifetime bargains. So during that time, somewhere between, say, November of 2008 and March of 2009, I gradually moved pretty much all of our clients into that fund. Of course, in late 2009, it took off like a shot. As of the time we cashed out, cumulative multi-year performance was probably something about on line with 94% for the fund over that time since 2008. And that compares to about 70% for the Vanguard S&P 500. So we outperformed the stock market in this mutual fund by 20%, and it outperformed the Vanguard Bond Index, which only did about 30% during that time. But this fund also dropped 18% in 2011, so we gave some of those gains up. Anyway, what has happened recently is that with the return of higher oil prices and the return of gold surging, as everybody and their grandmother buys gold internationally. It's not so much in the United States, it's more like India and China. Other mutual fund managers are following Prudential Jennison into these sectors. So what we're going to end up with is an excessive holding in oil and metals right when the thing tops out. And I'm concerned about stock market volatility. This fund has a beta of 1.4 as compared to a beta of only 1 for the stock market. So it's a high-risk fund. As I looked at this, I realized that we needed to stay diversified. We needed to keep our oil and metals holdings down to a reasonable level. So I sold this fund and put it in cash. Why did I put it in cash? Because right now the stock markets are looking fairly valued. They're not looking really overvalued, but insiders are selling a lot. So what I'm thinking is, it's a little overvalued. Maybe we'll see a correction. Maybe we won't. My thought is we're going to put this money into a low-risk hybrid fund, which invests in both stocks and bonds, or perhaps if the market does decline a little bit from its 4-year highs, which is where it's at now, we'll do some buying into a full risk equity fund to up our position in U.S. equities. Thank you.